Today we are going to be talking about what Joe Lonsdale has come up with regarding Palantir's earnings, what he's doing with his money, and I'll just mention that he is of course running a venture capital firm, no longer at Palantir, but I believe he still works with the team from time to time. Of course, was a co-founder and is now playing some options on Palantir for the next couple years. I don't see him on the list for insiders, so I'm guessing since he did own stock, about a 2% stake in the company, which he did sell some of that as it went public. But as I mentioned, he left the company in 2009 to start his own venture. He still remains close with the team. So I'm not sure he's going to show up on this list for a number of shares owned or anything like that because he is no longer an insider. But that also means he is free to share his opinions on the quarter. So this time he's actually talking about 2021 highlights. So here we go. First top line item he picks up is the revenue, which grew 41% year over year to 1.5 billion. And to get to 2 billion for this next year, it actually only requires a 33% growth rate, which I find pretty interesting. 2 billion would be another huge milestone. And then we have the US revenue, which was up 53% year over year to nearing closer to $1 billion, and the commercial revenue up 34%, less than the US as a whole, 645 million. US commercial plus 102%, or without revenue from SPACs, it is and taking out that priced in revenue, it will be 79%. So you'll see the SPACs actually do make a huge difference, and the reason for that is because they didn't have SPACs last year. They didn't, or I should say 2020. So introducing them in 2021 is why you see such a big difference in a year-over-year figure. So the adjusted free cash flow of 424 million. So he says, solid momentum, guys. Talking to Palantir management, he said, my 2003 self would be satisfied. Okay, so it's an interesting way of phrasing things. I think he's basically saying what he means by that word satisfied, because I'm not sure that really comes across great, meaning like contented, pleased. I think what he's really saying is like, if you look back on it from a management perspective, this is an incredible achievement. I would have been so happy to know that would be the future when we were just starting the company. He's also layering in is all of these expectations, the macro environment, what's happened to the stock, everything like that. He's satisfied even with all of that and seeing how far the company has come. But of course, shareholders that have just come on board, that's not really what they're looking back on. So it's worth noting that. Now, he continues on by saying, not to mention total net dollar retention of 131%. Let me open this. And we got the US commercial count being up 4.7 times. This all bodes well. High growth tech stocks sold off a lot and could go down more, but many great tech companies you think will grow for years at a high rate are now reasonably priced. Okay, so obviously just his opinion. He does work with lots of tech companies though, so probably a more educated opinion. And since I mentioned the dollar numbers, Palantir was founded as a mission-driven company, and I'm proud of what we created and what it's achieved. I haven't run it for years, but its success as a growing business enables greater sustainable success of its mission. So that was yesterday, or it looks like March 5th today, March 5th when he tweeted this. But back on, we'll see, February 18th, we had this tweet from Joe Lonsdale in reaction to the earnings. And here's what he said, essentially taking action on the downdraft in the price. He said, sold some pricey year-out downside volume on Palantir today. After selling covered calls when it was expensive last year, now it's cheap. Okay, so very interesting for him to say how he believed / knew it was expensive last year, and now he thinks the opposite of that. So obviously you can see that from the chart, and I think he knows it better than anyone, seeing the company and what it should be valued at. So of course he has a bit of an advantage there. So it seems like not only was he selling covered calls as essentially a bit of a bearish move then, back when the price was probably in the upper 20s, and now when it's down in the 10s, it seems like he is taking a bearish play. We'll look at that in just a moment. He says their numbers and guidance were strong with a report this week. So this was last week at this point, or a couple weeks ago now. Their team is doing great work. Markets are just slamming high growth tech stocks. My friend is making fun of me for doing this from another friend's boat today on a rare vacation and not knowing the exact implied volatility. It's high, but I'm just putting a bit of exposure back on here. He's talking about sharing on Twitter and showing support for my former colleagues. Okay, so let's get to the bottom of this. What does this mean? So selling, or he already sold some pricey year out downside volume. So what I think he means by that is selling downside volume year out. So that could be March. So we're looking at March now, year out, downside because it's a put. So he's selling downside year out volume. Okay. So what could he mean by this? Well, he could mean any number of these strikes. What happens to his money when the stock moves? So, and this is not going to be completely accurate because we don't know when he bought, we don't know what he bought exactly, but this is a bullish play. So we'll see if the stock actually falls much lower. If, let's say, in March of 2023, let's say the stock is at $10 somehow. He's still actually making a bit of money. Yeah, I'm not thinking he actually did the 12. The 12, I think, is a poor example. So maybe if we look at the 15 here, if we look at the 15 strike, that essentially means the break even drops to $9.30. So if the stock closes below that 1 year from now, you essentially lose however much it closes below that at this rate. Because this is a bullish move, you'll actually make money up to a certain point. So let's say the stock closes at 15, he will make $570 on his $930 investment. So his break even's $9.30. It's an interesting way of doing it. It's definitely more protected than potentially just buying calls or something like that, because closing anything above 930, he will make money. And this just example right here. But we'll see how that plays out for him. Here we're going to look at Bloomberg. I just wanted to bring up the price chart. So we haven't had too much activity with price targets. We had William Blair just saying outperform, but not very helpful when they don't actually give a price target. I haven't seen any of their research. But, $9, 24, 9, 15, 15, 16, 31, and then Masterlink Securities not being helpful at all with a $40 target. Which is great, but looks like they haven't updated that for a full year. So they're kind of left behind with where the stock is currently. So yeah, we're just looking at this again. Again, analyst targets and prices usually are actually backwards looking because when the stock moves, the analysts scramble to correct their price targets, as you will see from just this fluctuation between negative price spread and positive price spread. So analysts, in my opinion, essentially just follow what the stock is doing. They're not breaking ground on any incredible discoveries. But putting that aside, they have a average weighted price target of about $16. The stock's at about 11, indicates a 47% upside. Now, I'm not saying they're right. I'm not saying they're wrong. We'll see that some of these have been very wrong. So like Jeffries, when they said to buy back on, when did they say to buy? I don't know when they said to buy, but that's their return since then. This has happened to everyone that's covered Palantir stock with a buy, really. Negative 35%, negative 56% for Masterlink Securities, okay? And credit to 0400052 on Twitter. Just wanted to make sure I got that right. CFRA maintaining its hold opinion on Palantir Technologies. This was February 17th. So they say they raise our 12-month target based on a price to sales of 21 times our 2022 sales view of $2 billion. As I mentioned earlier, they are giving it a premium to its peer group on higher growth expectations and growing market share. So I guess this is where you could start to argue, should Palantir really be given a premium, or should it be just in line with everyone else? So a lower price to sales would certainly affect that price target. I'm not arguing for it either way. I'd love to just hear everyone's opinions on it. I'm just saying that if they're saying Palantir is giving higher growth, and I've heard lots of complaints on Palantir's growth and saying it should be much higher, which I think everyone's come to realize now this is the growth Palantir is able to provide for the platforms it is currently providing, and we just have to all come to realize that. So that's just what they do. Whether they deserve a premium for the quality of its products, the quality of its revenue, that's up to investors, but I don't know if it deserves a premium compared to, because we've looked at other companies and they really don't do what Palantir does. So I'd say it's just pretty arbitrary. You got to pick some number, so that's what they're doing here. They're trimming their EPS forecast by 1 cent, and their EPS for 2023 is going to start at $1.28. Not sure what just happened there. Palantir posted sales of $433 million, above consensus by $15 million, but missed by 10 cents on the non-GAAP EPS estimate of 2 cents. Q4 sales were up 35% year over year, while revenue was at $1.5 billion, an increase of 47%, led by higher number of deals notched and strong billings. PLTR's government business performed well, so interesting to see them saying that when everyone else has been bagging on the government business. But we see its commercial sector as a key growth engine and scale enabler. Sales of $194 million, up 47% in Q4, as products start to gain more attention from enterprise customers, especially in the US. Net dollar retention, touching on that, of US commercial was 150% in the December quarter, reflecting product stickiness, which I've been talking about for the longest time. Everyone that's been following Palantir knows how sticky the product is, which means the quality of the revenue is there, the flywheel turns, the company expands Palantir throughout its organization, which means more incremental revenue, more licensing of the product, expanding it to different departments. All of that drops further and further down to the bottom line. And versatility and expanding use cases. Okay, top line growth is lifting margins rapidly, putting Palantir, this is the most important part, on a path to achieving GAAP profitability in the medium term. Now, what does medium term mean? Probably not under 2 years. It could mean probably in the 3-year range. So I'd say 2 to 3 year range is now what the expectation is for profitability, now that we got that guidance from Alex Karp on the call. So is that a good thing? Yes, I think so, because maybe it won't be as much of a surprise. It definitely could still be a surprise along the way. I do still think there is doubt that Palantir can ever be profitable as a company. What I do like about it is that these analysts might start to believe it more, and the stock can reflect that accordingly. Doesn't mean it will 100% happen in their view, but it remains to be seen how other analysts will start to incorporate this into their price targets, into how they think about the company, stuff like that. So I hope this video was helpful. We talked about Joe Lonsdale, what he picks out, what he loves so much about the quarter, what he's doing with his money, selling pricey year out downside volume on Palantir because he is bullish on the company. And yeah, we talked about the CFRA maintaining their hold rating, some other analyst coverage, and yeah, that's where I'll leave it for now. Until next time.